What's up, everyone? This is Jack. This is going to be a quick trade review for today, Friday, Juneteenth, which is June 19th, 2026. I wanted to make a quick trade review video because I really only took one trade today, and it wasn't really a very good day to be trading, primarily because it's a holiday and the market is closing early today. Therefore, the volume on a day like today is much, much lighter. And so in my opinion, the market is a little bit more difficult to trade because the market is thinner. You know, it's moving a lot slower. There's not as many participants, and it increases the odds of trading range behavior. I think that on holidays like the 4th of July or Christmas, Thanksgiving, and things like that, there's an increased chance of a bull trend for a good part of the brief trading day, because there's also short market hours on those days as well. But and I think that there's kind of like an inside, secret handshake agreement type of thing where the institutions want to make things look a little more rosy around the holidays. Or maybe it's just human psychology. We're happier around the holidays, so naturally the markets are going to be a little bit happier. But anyway, just a quick review about my morning. I had the same routine today that I did yesterday and the day before, which is waking up, going on a short walk for 10 or 15 minutes, getting into a state of gratitude, and then coming in, having some tea, doing about 20-25 minutes of yoga, and then meditating for about 40-45 minutes, and then getting some more tea and getting to my desk and getting ready to trade. I always journal briefly before I start my session to decide if today is a go or no-go day. Today I wrote that I may not trade if the market is super slow, which it is, which is why I only took one trade, and I'm going to be done. It's Juneteenth. I've had a bit of a stressful morning, a good routine overall, but my wife has some stuff going on, and she's pretty stressed right now, so it's a little bit difficult for me to feel calm and balanced. But overall, I feel okay. And, so I decided that today was still an okay day to practice, not necessarily practice trading, but more so practice discipline, being flat, and maybe working on something else instead. So I definitely had that, optional mentality of, maybe I'm not going to trade at all today. But if I see something that makes sense, I'll consider it and execute as cleanly as I can in a disciplined, systematic manner. And so anyway, let's get into the trade. I did okay. I have a small winner, and I'm happy with that. But basically, we have a small gap down from yesterday. Yesterday on the daily chart was a doji and an inside bar, so that increases the odds that today will be a trading range day as well. But we have a small gap down, and small gap down days, there's an increased risk of trading range or trending trading range behavior. We could have trending behavior, but when you look at the first 6 bars, you can see very clearly we're in a tight trading range on the open. So the odds of that behavior continuing for the rest of the day today are very good. So with that in mind, you can see that we have basically a triangle. We have higher lows and some lower highs right here. Bar 6 failed to break out to the upside. It's very likely we'll try to test down below 6. But because we have a tight trading range, whatever breakout we get is not likely to get very far before it pulls back into this tight trading range, unless it's surprisingly strong and the context gets a little bit better for the bears. But right now, no consecutive bear bars, no consecutive bull bars, lots of tails above bars. But something interesting is happening, and that is, if you bought the close of every bar today so far, up until bar 6, you were able to make a small scalp. But if you sold the close of every bar so far today, you were not able to make a scalp. If you sold the close of 5, you really did not make a scalp. And if you sold the close of bar 1, you did not make a scalp. So I think that for that reason, and because of the big moves up that we've been getting, I think that the market is slightly more bullish than bearish, but it's in a tight trading range. So that means probably buyers not far below, probably sellers not far above. And with that in mind, I just waited for the next bar to form. And so we got bar 7. Bar 7 was a bear breakout. It broke to a new low of the day, and it looked pretty good and pretty strong so far. I could see this triangle here, and we have a breakout of that triangle. But the market then started to reverse up, and it moved pretty steadily up. And because it moved so far up, that told me that it's not only a failed breakout of the low of the day, but it's a failed breakout of this tight trading range. And so we're going to go back to the middle of the tight trading range, and that increases the odds that we go sideways to up. And we may even make a new high of the day and break out of the other side of the triangle, only probably to find sellers at some point. So the bars have been pretty small all day. The average bar range is about 5 points, and that's totally fine for me in my risk risk management system. So I bought the close of bar 7. It is a bear bar with a small bear body, but the reversal up is so big, and the context has been favoring the bulls for most of the day so far. Now, interesting, if you bought the close of 6, you did not make a scalp, but that is the first bar today where if you bought the close, you did not make a scalp. But I'm not so focused on that as much as the big reversal up right now. So we have a big reversal up on 7, and we have a buy signal because it's closing above its midpoint, increases the odds that we go a little bit higher at a minimum, and possibly we go a lot higher, and we get to a new high of the day up here. So I bought the close of 7, and I'm going to wait. Then we got bar 8. Bar 8 started to turn down initially, but then it started to rally. We poked above bar 7, and we closed at the 7 high. You can see I added to my position because my thesis of getting a strong move up is now becoming more validated, and the probability is going up. We have bar 8. It's a bull bar that increases the odds that we go sideways to up on the next bar and subsequent bars. So I added to my position because I initially entered a small position. So bar 8, good enough bar, would probably go at least a little bit higher. And then we have bar 9. We have an inside bar, and it's a bear bar, but it's a doji bar, increases the odds of buyers below, probably buyers somewhere below 8, definitely buyers below 7. And we have another close above the midpoint on bar 9. So it's another buy signal. And if you were flat, it would be reasonable to buy this as well. Increases the odds that we go sideways to up on the next bar and the next several bars. Then we had bar 10. We went below bar 8 and 9, and I was prepared to scale in below 7 if need be. I imagine that there are buyers below here. I did not scale in below 8 or 9 because I wanted more distance below my entries to scale in. But we started to reverse up, and once we did, I added to my position again because now we have a failed low 3 or a failed low 2 at a minimum. And this low is also the same exact price as the low of 1. So that is theoretically a wedge because we have a low, a test of the low, a third test of the low. It doesn't look like a wedge, but functionally it is. And that increases the odds that we get a new high of the day, or we at least go a little bit higher. But because the market is in a tight trading range, because the market is moving so slowly today, I really didn't want to stick around because I could tell that I'm a little bit impatient with the market, and it's not really doing what I want it to do. And even if we do go higher, we could stall at the moving average before we get to my targets up here. So I decided to get out with a small profit. I think I got maybe 1.5 points or something like that. The range is pretty small, and it'll probably stay pretty small all day. We'll probably continue this tight trading range behavior for the rest of the day. And that's it. That's all I decided to do. I thought that there was enough buying pressure for a move up. We got to move up, and I'm good with that. I don't need to continue trading today. It's a small range day. we have a short trading day, and I can be doing other work, and I would like to capitalize on an opportunity that seemed high probability to me, to at least get some practice in my craft. But now I'm going to go practice my craft in other ways. And I just wanted to kind of talk about that. Hopefully, this is helpful for somebody out there. It's really not an impressive trade. What could I have done better? I could have bought the close 7 and waited, done nothing on bar 8, done nothing on bar 9. But then when I got bar 10, it would have been interesting to buy below 8 or 9, or possibly somewhere around the 1 low, and trading small enough at that point to add on more if it were to go below 7, because odds are it goes back up into this range if it goes below 7. Just like odds are if it goes below 8 and 9, it's going to go back up into this range. So that's what I could have done better. But overall, I'm fine. So anyway, please like and subscribe, comment, let me know what you think, let me know what you're doing, and I'll follow up with you, and I'll see you on the next video. Thanks for watching. Take care.